Ashish Kyal of Wave Strategy Advisors, who's our technical expert today, joining in. Gentlemen, good afternoon to both of you.
Hi Sumera. See, first of all, I would like to say that it's important when you are trading for short term, you have a stop loss in place and need to have a plan, because without a stop loss, you might end up losing big money and just in short span of time. So as far as Vedanta is concerned, I think the overall sector, metal sector has outperformed and Vedanta has continued to consolidate in a range. So I see no issues on holding on to Vedanta for now. Hold on to this stock over here with a stop loss of 240 for the target of 298 on the upside. Then the next stock is Mazgaon Dock. If you look at it, this stock is again stuck in a range. His cost price is little higher, but I think he should be able to recover back his losses and maybe the stock can again start moving on the upside. So hold on to Mazgaon Dock. There is an important pivot low at 240 levels. Let's see if that remains protected. Use that as a very strict stop loss on Mazgaon Dock and then expect a target of somewhere around 280 where he can look forward for booking the profits. With respect to Sequent Scientific, again, his entry is at the higher levels. That's why he is seeing some losses across the portfolio that he is holding on. But again, Sequent Scientific, a very strong outperforming stock. If you look at the overall past few months of chart also, this stock has continued to do well and has been managing to protect the levels of 270 extremely well. So I think 270 is going to be a very important support for this stock, and we can then expect the stock to go towards the level of 340 on the upside or possibly higher. So hold Sequent Scientific with a stop loss of 270. And the last one, Suryodaya, we can clearly see it's in a downtrend. There is absolutely no pullback. The stock, I think, listed recently, as far as my data is concerned, I think from 275 it has continued to move down and currently around 205 odd levels. I am not too optimistic about this stock, so it's better you book out of this stock. And going forward, whenever you are trading short term, ensure that you use a stop loss before you enter the trade itself. See, as Mayuresh said, lower level 110 looks to be important. So just giving a little leeway, I think 108 can be the stop loss on this stock. It has just not done anything. It is been consolidating. It is falling also, but very slowly. So there is no movement as such. So I would not say I will be very much worried about this stock because we are not seeing much happening around here. Use a stop loss of 108 and maybe we can expect a target of somewhere around 125 where he can look forward to exit. But if the momentum builds up beyond 125, I think then he can hold on further. But right now, he can simply wait and watch how it plays out. Hold with a stop loss of 108 levels. As idea is concerned, I think it's best to be out on any pullback that he can get, maybe towards that 9.50 levels. It's good that he has made up his mind to be out from this stock. I remember so many of the investors or traders are actually stuck anticipating this to be a multi-bagger story and then getting stuck at every level. So please don't average it out, and it's better to get out. Once you are out of this, I think Bharti Airtel can look appealing and promising. We are already seeing positive traction happening, maybe on the back of the news, but right now is the time where it is trying to break out. The volumes have started picking up in today's session. So Bharti Airtel, he can look forward to possibly for investment purpose or maybe even from short-term purpose. That stock looks good. On the downside, 540 can be a good stop loss for this stock, and we can expect it to go towards the level of 600. So those are the targets and stop loss he can maintain and enter into Bharti rather than and get out of Vodafone Idea.
All right.
Yes, Sumera, Deccan Cement, as far as I can see, the stock has done exceptionally well. I think the stock started rallying from 420 to and is now somewhere around the levels of 734 if I'm looking at the chart correctly. And there is no reason for anyone to complain when you are. So for me, I would possibly hold on to Deccan Cement for sure, maintaining a stop loss of 665 on the downside for the target of 820, and possibly this stock can do much better from here on. And as far as Maruti is concerned, yes, we are seeing some kind of a consolidation in this space. Maruti has not done exceptionally well. It's just consolidating, but I think next, if the time horizon can be at least a year and 2 years from here on, he can possibly invest in Maruti. On the upside, we can expect it to again reach those highs of around 8,300 odd levels and possibly break out of that as well. So Maruti can be a good investment, but yes, the time horizon has to be at least 1.5 to 2 years is what I'm looking at this stock for.
Okay, understood. So, Mr. Kapoor, that's the advice for you. I hope you found that useful.